trade talk headline confusion out there. That PMI number is not good, though, although the market is not moving to the downside. Just take a look at the sectors here. And what you got here is a lot of sectors that move on trade talk. Metals and mining, semis weaker, industrials. This is all trade talk stuff here. Energy, perennial disappointment. What's oil down 4 days in a row here. That's a big disappointment for the month. And, of course, defensive REIT stocks move up. So very predictable reaction when you get confusion on the markets. What the good news is we're ending October and no big blow-ups. Remember, everybody's afraid of October, bad things happening. But it hasn't really happened here. And we're entering a seasonally strong period. November is the second biggest gainer of the year for a month. In the last, since 1950. December is number one, so seasonally strong period. The backstop's in place from the Federal Reserve. Maybe they're neutral, but everybody believes they'll step in if things get worse. The market believes that right now. That's important. And we've seen some small rotations into cyclicals, not a lot, but let me just show you what I think is going on here for the month here. So two biggest sectors in the S&P, technology and financial. So there you go. The Fed has engineered a modest steepening of the yield curve, and there's your banks showing that. Moving up, and technology, two biggest sectors move up. It's no wonder the S&P moves up about 2% on the month. Semiconductors, hope springs eternal with that sector, and that's what's been moving technology. And you'll notice the former leadership groups, all defensive names, all are down this month. Staples, utilities, energy, of course, a perennial disappointment. That's not defensive, that's cyclical, but that's an exception to the rule. So let's see. Why are we getting new highs but not a lot of breakouts? It's because it's a new high rally with just big cap stops, the biggest caps of all. The five biggest stocks all are really outperforming. The S&P's up 2% for the month. Microsoft 4%. Apple's up 10% this month. Amazon 2%. Alphabet's up 4%. Facebook's up 11%. Put these five stocks together, they're about 22% of the market cap of the S&P 500, roughly. But you get the point. Five stocks are more than 20% of the S&P. When those stocks go up double-digit, the S&P is going to go up, and you can have a lot of other stuff sort of underperforming and still get the market at new high. That is exactly what we're getting, and that's why you're not seeing tons of new individual stock breakouts. How about the market concerns of what's out there? Well, there's a few things. I've been complaining about the trading volumes for the last few weeks. They're very lackluster. We're at new highs. There's not a lot of buying enthusiasm. Instead, there's just lack of selling pressure. Different kind of mentality. Still new highs, but nobody's buying the market hand over fist. Very low volatility. VIX at 13, and not a lot of people sort of interested in adding to positions. Very confusing trading news flow. And December, let's call it post-traumatic stress disorder. Remember, 20% drop in December last year, but it's a very different market. We remember the Fed was in tightening mode last year. Now they are not, and it's a very different kind of attitude. Why a lot of people think December 2020, I should say 2018, not going to happen.